Dude, the Secretary of the Treasury tweeted that Bitcoin has run for 17 years. Why can't the government start again? Think about that.
Yeah.
That's huge. Imagine that, 5 years ago. Impossible to imagine.
One second. I'm just looking at, Bitcoin Magazine's headlines from, I guess, 9 minutes ago. President Trump's son says he's all in on Bitcoin. JP Morgan reporting holding 64% more Bitcoin than last disclosure. These are ridiculous headlines. It's insane where we're at. There is no taboo. Taboo is to not be talking about Bitcoin in your boardroom. So it's a fascinating time.
All right. We got a little Friday afternoon Bitcoin policy hour rip for everybody here. We got some good energy in the recording studio and some good topics to dig into today. So as usual, Zach Cohen here with the Bitcoin Policy Institute. We're joined by Zach Shapiro, BPI's head of policy, Ken Egan, BPI's director of government affairs, and Stephen Pollack, BPI's senior vice president of development. Gentlemen, thanks for joining. We've got some topics today. We're going to kind of switch it up a little bit. We don't have our usual stack of kind of policy updates to go through. So maybe a little bit more of, what the kids on Twitter are calling club slop. First topic for the day, I'm going to open it up. Zach, we're going to go through maybe the more bearish part of the discussion today, which was the Samourai wallet sentencing. We got the max sort of sentence that was possible under their plea deal. But yeah, walk us through the details there and maybe, provide some context for folks who think that, there's sort of a major update here, because it sounds like that might not actually be the case.
Yeah, so we're recording the day after Keone Rodriguez, one of the two defendants in the Samourai wallet case, was sentenced to the statutory maximum, meaning the highest amount of time allowed by law for the crime that both the defense pled guilty to, which is conspiracy to engage in unlicensed money transmission. It's unfortunate. I think it's unjust. I think both the defense are not actually technically guilty of the crime to which they have pled guilty. But this sentence is not unexpected. I think it was more or less inevitable. What happened in this case is the defense were charged with two crimes. One was a money laundering offense, which is a more serious crime. It doesn't really have to do with any particular technology. It's you did something to help criminals launder funds. And that had up to a 20-year in prison sentence, but would have required the government to prove at trial the sort of specific intent that was in the defendant's minds, that they intentionally helped criminals. And then there's this lesser charge, the money transmission charge, that merely requires that they knew that criminals were using the tool they put out. Now, from a legal perspective, the name of the charge they pled guilty to is pretty Orwellian in two respects. The first is because of the word unlicensed. The theory that the government ultimately charged and they pled guilty to had nothing to do with licenses. The government basically retracted their earlier theory that the defendants were sort of money transmitters under the Bank Secrecy Act or under FinCEN's regulations. In fact, we learned during this case that the government went to FinCEN and asked, do we think that these guys were money transmitters? And FinCEN said no. And instead, the type of unlicensed money transmission that they were charged with doesn't require anything to do with a license. It's just they knowingly transmitted funds that were, from criminals. And the other Orwellian part is around the word transmission. The defendants here, if you understand the technology that they built, which is a non-custodial coin join, they didn't transmit anything. Their users were the ones transmitting funds. And when you plead guilty to a crime, you have to do what's called an allocution, where you say in your own words the conduct that you did that makes you guilty of a crime. And both Keone and Bill were very careful to accurately describe the way Samourai Wallet worked, which was a bit awkward because it didn't transmit anyone's funds. It was software that helped users find each other to engage in collaborative transactions, where users would send funds from one address they controlled to another address they controlled. And there is no in between. It's just a normal Bitcoin transaction, but designed to sort of add privacy to Bitcoin or to UTXOs that these users held. So, they're going to spend, at least Keone, but there's reason to think that it's probably going to be similar with Bill. So spend 5 years in prison for unlicensed money transmission, where he neither needed a license nor transmitted funds. And so, that sucks. There's no way around it.
Yeah, I want to double tap a little bit on a comment that I guess you probably made to me earlier today, which is that this is more of a reflection of like Judge Coate and her sort of predispositions and general sort of sentencing standards, that it sounds like she's just an exceptionally harsh sentencer, and we shouldn't actually read into this beyond that itself, because I think there is a tendency for folks to say, oh well, they got the maximum sentence, this was this might be some indication that the Department of Justice as a whole or the courts as a whole are still like really unfavorable to this issue. That might still be the case, but again, I think there might be some evidence that this is not maybe the proper reading in this scenario.
Yeah, I don't really think it is. If I were to speculate about the motives of everyone involved here, why did the Department of Justice bring this case in the first place? I think that they see money laundering using crypto as a real problem, and it is a real problem to some extent. They saw that criminals do sometimes use tools like CoinJoins to hide their funds, or other non-custodial privacy tools like Tornado Cash. They know that it is very hard to prove specific intent, that someone intended to help criminals launder funds when they're building crypto infrastructure. And so they're sort of using this particular offense as money laundering light. It's kind of like the government going after Al Capone for tax evasion rather than sort of the other mafia stuff. And it's easier to get convictions. And the government, at least the Biden administration, when they brought this case, didn't care about the collateral damage to the crypto industry that these cases would set when you bring them against non-custodial developers. But I don't know that it was intentionally like an attack on crypto. And then Judge Cote is famously a pro-government, pro-prosecution, very tough judge and sentencer. That is, I think, is a big part of what motivated the defense to plead guilty, because having to have a trial in front of Judge Cote with an unknown jury where you could face 20 years in prison is just a real gamble. And she had sort of summarily denied all of their legal arguments and basically waved off the sort of shocking evidence that they uncovered, that the DOJ sort of ignored FinCEN's guidance that the defense weren't guilty of the crime they pled guilty to. And so I think this was really just a calculation on their part, avoiding the downside of decades in prison. And then Judge Cote, I don't think, just based on her statements, really cares so much about the difference between the money transmission and the money laundering charge. In fact, at Keone's guilty plea, she confused them and read the elements of the wrong charge and had to be corrected by Keone's lawyer on that point. But I think that is really evidence that, like, the mental state here is money laundering equals bad. And, even though sort of conspiracy and money laundering are hard things to prove, this is a way that you can punish, what the government views as money launderers. I don't think that's a statement so much about the judiciary as a whole. I mean, we'll see. Coin Center has an important case, Llewellyn versus Garland, going on right now. I think it's now Llewellyn versus Bondi, technically, because you sue the attorney general. But we'll see if other judges will react differently. And then, of course, the sort of more permanent way to make sure that this doesn't happen again is to pass the Clarity Act and the developer protections there.
Any comments from the peanut gallery here, Ken or Stephen?
Yeah. I mean, Zach lays it out as well as anyone, that is talking about this. So it's, there's not a ton more to add, except, I guess, more outrage on my part, just that the sooner that we can sort of set some parameters to help, I think the charitable way to say, guide judges in these types of situations, and to kind of, I guess, hem them in a bit, keep them on the reservation, the better. It's a ridiculous miscarriage of justice, in my opinion. And, it's a tragedy. I hate to see it unfold. It's a hard week, I think, for everyone, especially for guys that are going to be spending many years in prison.
Yeah, Zach. I mean, I think we're looking at these are the last gasps of where we were and as opposed to where we're going. Unfortunately, these two guys have to bear the brunt of those last gasps, but it's the last gasps. I mean, I think there were expectations that the new administration would undo everything that the Biden administration did against the industry. They undid a lot of it, but I think it was maybe a little optimistic to hope that they would undo everything that the Biden administration started. I think that's the key point, and Zach said it. I think this underscores the point of why it's important to actually pass legislation that establishes foundational law about what is decentralized, and what is not, for example, or what is money transmission, what is not. I think it's important. I mean, since Trump took office, he disbanded the DOJ unit that investigated cryptocurrency. I think you'll always have law enforcement agents jurisdiction shop trying to find the right place where they think that their best chance of prosecution is going to happen. I probably no coincidence that they ended up in front of this judge for this case. And again, it's unfortunate. I mean, there's a human cost to this. These two guys who have to go to one certainly and probably, or two are going to go to prison over this. But the way I look at it, this is sort of the last faint echoes of the past, underscoring why we have to do what we're working on at BPI, passing clarity, passing the BRCA. But I don't know that it indicates anything other than that. It's just a reminder where we are and why it's important not to take this time for granted, and get working on important stuff.
I have a question for Zach Shapiro. Something that I don't know if we've discussed before, but the community, Bitcoin community, others raised a pretty big stink about this, and this has been, at least from my perspective, a fairly well publicized case from the beginning all the way through sentencing. But that's our perspective, right? We're living, breathing, Bitcoin industry all day, every day, peer-to-peer, open source developers. Did we did we really raise, like, is this sort of a unique level of stink that we raised, or is this did it not sort of reach the ears of those in power like we think it did? Does that make sense?
Yeah. I think the answer to that is complicated. For us, we did raise a pretty big stink. I think it did reach the ears of at least some people in power. I know because I saw that happen. I think, some of what the administration did, I think the Blanche memo is in response to our concerns. I think the government dropping the allegation that the non-custodial tools in Tornado Cash and Samourai Wallet needed to be licensed by FinCEN is important, and honestly, like, not to minimize what's happening to the individual defendants, but a huge sort of policy win that we're not setting the precedent that judges have ruled or people have pled guilty to, needing a license with FinCEN and not getting it. So I don't want to lose sight of that. But this is a pretty niche issue, even as far as crypto issues go, right? I mean, it's like everyone has heard of the our token securities or commodities issue. Everyone heard of the sort of Binance prosecution, and this is definitely a little bit more in the weeds. And so, I would call this a partial success, but there's both difficult politics around the government intervening in federal criminal prosecutions and sort of hot button issues around money laundering and criminals in the case of Tornado Cash, North Korea, and it just wasn't enough to stop the cases cold in their tracks.
Yeah, when you're in the middle of something, it's hard to be objective, and so I was just kind of curious what your perspective was on that. I have mine, which seems like everyone did, sort of valiantly went to bat here, and but we're still, we're a small industry and growing. But Ken, yeah, I agree with your bullish take. I agree with your bullish take. I think we're at the kind of tail end of some of this, but I hate it that these guys had to kind of, somebody has to be kind of the last ones, and I hated that it was them. It's brutal.
I'm also curious if we should, I know there was a little bit of a Twitter rumble that, the folks who were behind the Ross Ulbricht pardoning might put some resources towards this. I wonder if that's kind of something worth rallying our efforts around, what the feasibility of that is. Yeah, just kind of throwing that out there.
Without going into a lot of yes, it is something that's feasible, and we should put a lot of effort into. And if it's going to happen, it's going to happen soon. And so definitely, we should make noise for this, and we may at some point be back out there fundraising to help these folks get a pardon attorney.
Well, you heard it here first, folks.
Bravo.
All right. Let's switch gears a little bit. I think maybe since we talked last, I don't know exactly what the date on this was, but there was some news that came out that JP Morgan is going to begin allowing Bitcoin and Ether as collateral. Right. I think this is part of a larger kind of institutionalizing of Bitcoin, especially to within the realm of government regulated banks, right? We're talking about JP Morgan here, the kind of top dog. Some people, they joke about JP Morgan being a branch of the Fed. I think there's definitely some signal in here that I want to unpack, as a group. Yeah, just curious about the kind of centralized versus, self-custody trade-offs here, the extent to which, the benefits of these assets gets restricted for folks who are using self-custody. Yeah, I just think there's kind of some interest here from both a policy perspective and a markets perspective. So anyone is feel free to kick us off.
Yeah, I think once you saw Pulte, the Federal Housing Administration, announced that Bitcoin or crypto in general, would be eligible for use as collateral on mortgages. I mean, the housing market is the 8,000-ton gorilla in the U.S. economy. It affects not just where you live, but lots of jobs. Got to build the houses, got to fill them with furniture, got to power them. I mean, the network effects of housing are tremendous. But I think fundamentally, why they're thinking about this is that we are in need of credit. They're in housing, for example, there are two issues in the housing market. There's supply, but there's also a credit crunch. People can't get credit. And I think the overall pivot from the Fed, we're in QT, rates have been cut. All of this is to help money circulate through the economy. And there's a lot of crypto money in the economy sitting idle, not being able to use for what I think the JP Morgans of the world, certainly the treasuries of the world, might consider productive uses. So rather than have that sit in hardware wallets, why not throw that on the conveyor belt and circulate that in the economy? And having big banks do that is a great way to do that. I mean, we're talking about billions and billions of dollars, if not more, at least in the United States. So I think this was inevitable. This was sort of our basic thinking is Bitcoin as global collateral. That's going to start as Bitcoin as collateral for in the U.S. economy. So for me, this is inevitable, especially at a time where there is a great search for credit. Young people own crypto. People want to buy things. The banks want a loan, but the fundamental issue is though for that to happen, there needs to be collateral. So why not bring this? It's certainly, at least in the United States, is hundreds of billions of dollars off the shelf and let it circulate and let it ride.
Yeah, I think that's a good point, Ken. We think a little bit about like the role of Bitcoin and its relationship to like U.S. politics, right? And you have the sort of capital angle of it, right, where that's, as you were saying, sort of bringing assets and value into the economy. At the same time, it is potentially perceived negatively as a barrier to capital controls, sort of financial oversight per se. And that, again, there's this balance here. And we talked about this a couple of weeks ago where you have, with the stablecoin issue, you have the, this is good for treasury market. This is good for treasury bond demand. At the same time, this is going to be potentially unclear at this moment in time, drawing deposits out of commercial banks, right? And so there's this sort of push-pull that we're watching play out in real time that's just really interesting. And I think, Ken, this is evidence, and correct me if you think I'm wrong here, but that this is evidence that the capital side of Bitcoin is sort of winning, and the potential like capital control or financial control element is sort of getting like loosened, and that the fears of that thing, or the fears of Bitcoin being the early days of the U.S. losing its chokehold on money around the world, that maybe there's kind of a higher order interest at play. I don't know if you want to weigh in on that.
Well, I mean, this is the big Overton window switch from our last topic, where the echoes of the past of these poor guys having to go to jail for doing something that I think we all agree was not criminal. Certainly does not merit prison. Here we are, literally in the same week, the biggest money managers in the world saying, okay, we're going to accept your funny internet money as collateral to do all kinds of things with. That's when you know that the sort of the stereotypical, men with monocles and cigars at the big table have decided that this asset's important and they want to get their piece of it. This addresses the issue of capital control and whatnot. I mean, this brings these assets back into circulation, back into the economy. I think a lot of us we made the case even on sort of Bitcoin as money argument on Capitol Hill, and I get kind of eye raises about this because you always ask about people should be able to spend their Bitcoin without paying capital gains taxes. You get this, no, it just benefits rich people. Our point is though, but this brings it back into circulation. These rich people are going to have it whether you want them to or not. Do you want this? Do you want the broader economy to benefit from the presence of this asset and all the wealth behind it and all the momentum behind it? Well, then let people spend it. Let it circulate. That's really the key. I mean, what do like traditional finance people talk about all the time? They talk about liquidity, right? Why is the stock market dumping right now? Well, because there's $1 trillion sitting in the Treasury General account, not being spent at Chipotle and buying cars and wherever the hell else people do with their money. Right now, it's sitting in the Treasury General account, still being sucked out of the economy, reducing liquidity. There's lots of crypto money on the sidelines that money stuck in the Treasury General account could be used to juice liquidity, and that's what the government ultimately wants. I'm not arguing that people should use their Bitcoin to buy things or to finance their house. I'm just saying this is what the big sort of decision makers looking at the economy and money flows, and how we keep this massive ship moving. They need liquidity. And there's a lot of that on the sidelines. So why not bring it in? So, but I think this is your big Overton window shift from the Samourai guys going to prison to literally the definition of the establishment, certainly the TradFi establishment, saying, okay, fine, you can use your crypto as collateral.
The credit crunch must be getting pretty crunchy for them to, sort of admit pet rocks into the conversation, wouldn't you think, Ken?
Well, yeah, again, there's, the Bitcoin, people were freaking out over, Bitcoin dipping under 100,000. It's above that now. Doesn't change the fact it's still
isn't that what Jamie Dimon
trillion
famously?
asset.
Isn't that what Jamie Dimon called Bitcoin?
Yes,
it was akin
exactly.
to pet rocks.
So it is. No, that was Charlie.
It must be getting bad out there in the streets.
I mean, they can't cut rates fast enough. I mean, I heard Stephen Myron on a podcast yesterday, Money Matters with Jack Farley, talking about rates and liquidity and why this is really important. We're at the point now. I remember we're also going to midterm elections, right? I mean, this is the time when it's time to pull the stops out and get the juice flowing. So it's
Right.
perfect. And at the end of the day, what does JP Morgan want to do? They want to make money. And if there are people that want to use their Bitcoin to borrow money from them and pay them interest on it, well, why not? They win. The people win theoretically, but certainly the broader economy wins when you find ways to inject billions and billions of dollars into spending.
Yeah. I mean, I'm kind of joking around, but like there is a question of, is it so much that they're realizing, oh man, they've fallen in love with Bitcoin, they see the virtues and are capitulating to Bitcoin, or is it, while sort of bullish, like you've said, not just for price, but just for the growth of Bitcoin, maybe it's a little bearish for other parts of the economy. To me, I just wonder if things were peachy, would we be seeing some of these headlines?
Hard to say. I think that my personal assessment is that once BlackRock shifted there, you start down the path toward inevitability of Bitcoin and other crypto assets. But frankly, what they really care about is Bitcoin becoming an instrument of global capital. The fact that, I mean, you can even buy it on Vanguard now, right? Like the stodgiest, most conservative money manager in the world, right? Now even then you can buy it. But Morgan Stanley next year is going to let you buy, they're going to let you buy crypto, not ETFs, but crypto on their platform, certain Bitcoin, Ethereum, a couple others. This is the future. And these banks, I think it's also. It's not. I don't want to be too cynical about it. There are people, these banks, there were like my father was a Wall Street guy, and he's older now. He doesn't understand Bitcoin. But there are people that are younger than me, that get it and they see the value. And there's always that upward pressure of this. No, this is an asset class that can do something. We can make money off it, but also it can drive growth. So I'm not surprised. I think this was inevitability. I think, but the timing, it's all timing, right before sort of the larger dominoes fall. And I mean, look at the economy, look at credit markets, like look at liquidity flows. I'm not saying dominoes are falling, but they're getting a little wobbly. So this is I it's no surprise that smart big money managers who really see the big picture. I mean, we say what we want about these guys, but they know what's going on. They get it. They know which way the pipes flow in the plumbing infrastructure. It's no surprise that they're saying no. It's time to open up these valves and get it flowing.
It's also a pretty significant shift in the Overton window, right? I mean, it really signals the career risk around talking about Bitcoin and dealing with Bitcoin is going away. The Bitcoin is becoming mainstreamed, and you can have an opinion one way or another about what that does for the sort of cypherpunk or freedom-oriented values around Bitcoin. But it is, and I'm sure we'll talk about this more with sort of the price action and sort of like on-chain distribution metrics we're seeing, it is another sign of maturation, and we're reaching another phase in the broader Bitcoin story.
Yeah, let's tie this up in a bow, and then Zach, we'll move on to Bitcoin's silent IPO. But yeah, I think like the point that we're at right now is that the what was traditionally considered the negative parts of Bitcoin, the things that concerned the U.S. government, are now seemingly less concerning, and I think it's right to attribute that to an Overton window shift. I think it's also probably right to attribute that to changing fiscal and monetary conditions. But nonetheless, there was a great graph from or chart from River that showed where all the major banks lay on like Bitcoin custody and Bitcoin services for high net worth customers, and you can just kind of see the ticks going down.
The Secretary of the Treasury tweeted that Bitcoin has run for 17 years. Why can't the government start again? Think about that.
Yeah,
that's huge.
Yeah,
imagine that 5 years ago. Impossible to imagine.
Totally. Well said. Okay, there was an article.
Wait, one second. You say you want to tie it up in a bow. I'm just looking at Bitcoin magazine's headlines from, I guess, 9 minutes ago in my inbox. And these are the just-ins. These are the just-ins. President Trump's son says he's all in on Bitcoin. JP Morgan reporting holding 64% more Bitcoin than last disclosure. Trump family-backed Bitcoin mining company acquires 100 and something Bitcoin. These are insane. These are ridiculous headlines. It's kind of crept up on us. And I know I kind of tend to do this. Like, I think I do this every, at least once a month where I just zoom out, and I'm like, can you believe this? But I'm going to keep doing that because it's insane, where we're at. And, people can agree, don't like it, whatever, but it's insane sort of where we're at, just rapidly getting to this point where any of the taboo, there is no taboo. The taboo is to not be talking about Bitcoin in your boardroom. So it's a fascinating time.
Yeah. Well, so that begs the question, Stephen, and you can defer on this, but if it's the case that all these conditions are lining up, right? The Bitcoin has IPO'd sort of sentiment is upon us, then again, why are we seeing this consolidation in price? Why are we kind of chopping sideways? Let's discuss that for the rest of this episode. I'm curious if anyone has any thoughts.
No, I'm not going to defer. It's because Ken sold. He sold. He cashed out.
I will not defer. I like that, Stephen. That's good.
I will not defer. You can't handle it. The truth. Can't handle the truth. But yeah, Ken dumped his bags at 113 and nuked us to 99. But that's my case. Ken, I didn't. I was going to wait till next episode to share that, but so you're going to get counter traded here hard.
Well, wanted to buy a nice car, not. Well, Zach, perspective also. Look, but yeah, Bitcoin is, I think, remains like the best canary in the coal mine. Bitcoin started dumping a week and change ago, right? And look what happened. Look what happened this week. Massive deleveraging. Even the video is down. I don't know what 8%. But think about other things that are in the news, like rare earths and MP Materials. That's like the rare earths company that the government's taking a stake in. At one point, that was worth like I think it was double the market cap of all rare earths in the world, and it's like down like 60%. There are other things going on, and when you see Bitcoin dump like that, it's only inevitably a matter of time before everything else dumps. So I don't think the problem is a Bitcoin problem. I think there was a deleveraging. There's some liquidity issues in the economy, and again, Bitcoin sort of stuck its toe under 99. But I think right now we're recording on Friday, it's trading near almost 104,000. For me, that's pretty resilient. So I don't think that this is a Bitcoin problem. I think this is just a broader. It led the way. Well, it foretold a broader deleveraging in the economy. I mean, AI stocks have been destroyed. Uranium stocks. We've saw the Department of Energy ink deals with Camco and Westinghouse to build small nuclear reactors. When the government's your guaranteed buyer and your stock still dips, there's something else going on in the universe. So I think that the fact that Bitcoin is holding strong over 100 and rebounding today, I don't doubt I'll wake up tomorrow morning and be back to 101. But I don't think it's a Bitcoin problem. I think it's just a broader leveraging, and that Bitcoin just foretold and will be the first to exit and to recover from.
Yeah, I think that's right. Let's talk a little bit. Like, I want to dig into the details of this article. The title of it is Bitcoin's Silent IPO, and just for some context for folks, I think the reason that they're calling it this silent IPO is that you basically have these early adopters, right? Like miners. You got like the OG whales. And these folks are realizing profit. We have pretty significant evidence of this. We had I don't know if you all remember when Galaxy announced that they had basically executed a transaction for like $9 billion for one
80,000 coins, wasn't it? Something like that.
Yeah, something insane. And I think like that has largely kind of classified this particular like market cycle that we're in, and to some extent there's explanatory power in that, right? You have Bitcoin ETFs. I think we're now like 160 billion or something like that. Just a huge amount of inflows over the kind of year and a half that they've been trading. At the same time, you have these kind of OGs, selling, like taking their profits, and of course they should do that. Of course, that's that would be the rational thing to do. But that explains some of the chop activity that we're seeing, and this article draws a parallel from that to, like any kind of risk asset IPOing, any stock where you have the folks who are early in the company, they're getting their liquidity, and then the ownership of the stock is trading hands, and that's just a sort of natural market function. That's exactly what we'd expect to see, and maybe that could explain some of the activity. Zach, I don't know if you want to kind of jump off from there just to set the scene.
So this article by Jordi Visser was sort of the talk of the town over the last week or two. And if you want to be cynical about it, right, like it is some of the best available cope. And I think beyond the sort of liquidity things that Ken was saying, I think there are a lot of folks who feel like we've had sort of a disappointing market cycle. The problem is much worse if you're looking beyond just Bitcoin into crypto, where like things are like a lot of things are close to or at their like below their FTX crash lows. And this is it's been a different cycle in a lot of ways. And the sort of narrative of the silent IPO is that despite the fact that it kind of sounds silly, right? Like Bitcoin is in many ways one of the most liquid assets in the world. There was never a time where it was privately held. You could always trade it. It was free at a certain point of time. There just wasn't the liquidity that there is now, specifically because of ETFs. And you can feel a lot of the positive aspects, if you've been in Bitcoin, of the vibe shift since the ETFs. Like we were talking about before, a lot of the career risk is gone. Nation states are more openly taking it seriously. Wall Street is more openly taking it seriously. The ETFs were a huge success. There's a huge amount of inflows, but for every buyer, there's also a seller, right? That's how the market works. And for the people who've been sitting on Bitcoin since extremely low prices and have a huge amount of Bitcoin, this is the first time that they can take a lot of profits and upgrade their life and figure out their sort of inheritance plan without moving the price, because there are the sort of tremendous amount of buyers and patient buyers, right? Not FOMO retail buyers like we had in previous cycles, but institutional buyers on the other side. And when you have people who are patient sellers who are trying to get liquidity and people who are patient buyers who are trying to build up a position slowly over time, what you see is sideways price action. And that has pretty good explanatory power for the price action we've seen in Bitcoin. We've seen a much more rounded top. We've not seen anything parabolic, but we've also not seen huge dips. The dips get bought up quickly. It also helps explain the shitty price action for non-Bitcoin crypto, because the people who are selling and the people who are buying are just not in the crypto game in the same way that sort of crypto has been beta to Bitcoin in previous cycles. And so there just isn't the same patient institutional bid. And so, maybe that's what's going on. And for my money, I think that is at least a significant part of the story. I think you also need to look at the October 10th deleveraging event, which is a crypto story, not a Bitcoin story, but I think that's also part of the story. But if you look at it over the long term, this is beyond sort of just being cope. I think there are genuinely super bullish aspects of this. Bitcoin it has a better Gini coefficient, meaning sort of like the distribution of who holds it, than a lot of traditional assets. But still, it's actual Bitcoin is held in a really concentrated way by early holders. And if we're going to reach the next stage of what Bitcoin means, those holders need to distribute to more people, and that's going to create a more stable market structure. And that process of coins churning from sort of the early people in this article, the majority of this article, they talk about sort of the visionaries, the cypherpunks, the early believers, to sort of long-term patient capital. That rotation might take a while, but once that's done, that paves the way for price to go up. Now, macro conditions may or may not, and liquidity may or may not cooperate with that, right? It might be that we don't get the top we wanted, and then we enter a bear market for non-Bitcoin or non-crypto reasons. But even if that happens, the fact that we've been able to have this much distribution this cycle and this big a change, that was something that had to be on our bingo card necessarily at some point. And it's pretty amazing that we have the deep and liquid institutional bid that we have for it now. And what I would encourage people who are listening to this, especially if you're new to Bitcoin, price isn't the only thing that matters, right? Price is like, what is the last price that Bitcoin traded at? And in parabolic bull runs, yeah, that gets really exciting, but then it tends to crash. The realized price of Bitcoin, though, is, I think, a really interesting metric, right? What is the average price that people who bought Bitcoin actually paid for Bitcoin? How much money has actually gone into this ecosystem? How many people have looked at their hard-earned savings, or their retirement account or their pension plan or their sovereign wealth fund and said, I am going to trust this savings technology with my future, with my long-term savings. And I think that is at least as powerful a metric with which to measure the success of Bitcoin as a savings technology as the sort of fiat price on any given day. Now, if 10 years from now, we're sitting here and the price hasn't gone up, okay, then that's a different story, and maybe something else is deeply wrong. But for now, to the extent that there is truth in this article, in the silent IPO idea, and I tend to think there is, I think that's a powerfully sort of bullish story about what adoption looks like. And one last thing, and then I'll stop my monologue. But the Jordi Visser, the guy who wrote this, is comparing, like, he used to work in traditional markets, and this is what other assets look like when they IPO, right? You have this transfer from sort of the early visionaries to the sort of asset managers and the long-term patient capital, and that's just necessarily a part of the story. So that may well be a big part of what we're seeing.
And I think Glassnode has that realized price like in the low 90s or something. The realized prices, that's good. It's a good call, Zach. I think Glassnode has it in the 91, 92 zone, which is still above where we are now.
One thing that caught my attention, just on first glance reading this, is and Zach, you echoed this, is this transition from the kind of cypherpunk OG holder of Bitcoin to the, sort of patient capital investor, the sort of institutional per se. That's, I think, a strong observation. And I think it has just a ton of implications as we think about kind of demographics, who is holding Bitcoin, even potentially what the political trends look like, right? You have, we look at like the Trump election, for example, right? We can trace pretty carefully that, some of the folks who maybe were more cypherpunk, who said, I don't want to engage with politics, saw an opportunity with Trump. Some of them were kind of won over by the Ross Ulbricht narrative, to put their eggs in that basket. And I think there's also implications, from like a software development perspective, what kinds of technologies are getting built in the Bitcoin stack, what are our sort of patterns for holding the asset? Like there's just so many different kind of elements that go along with these demographics of holders, that if it's the case that we're seeing this rotation, which I think we are, but that could sort of like fundamentally change the dynamics that we see, both from a market perspective, but from a community perspective, political perspective. Like this could be sort of a massive shift that just slipped under our feet. So yeah, maybe let's dig into that a little bit here.
Yeah, the article alludes to this. Zach Shapiro, you mentioned distribution, and it kind of hits distribution a few different angles. I think distribution and decentralization, we can kind of use those words interchangeably, but they're very different. And I think it's an interesting conversation to have, whether we're moving from the parts of Bitcoin that are centralized, the coins that are centralized, are we moving from one type of centralization to another? Would you consider this more or less decentralization? I think in a vacuum, you would think one person holding massive amounts of coins versus an institution holding them would be more decentralized, but I totally understand why people would say that that's not the case. But that person who may have sold those coins, now you may change that. That might cause someone to kind of change their stance, if you knew that. But yeah, I think the broad distribution of what we're seeing, if that's what we're seeing, is definitely like it's changing the calculus of what it means for Bitcoin to continue to be decentralized. It's changing sort of the definition of that, and changing what we think of when we say these types of words. So it's sort of fascinating to see the narratives finding their footing, trying to find traction on X and whatnot, as people kind of, I don't know, some cope, some just seeking understanding and trying to catch up to reality.
So we touched on this a little bit last week. What you mentioned, Stephen, like the old holders, as people have noted, old holders get older, they die, they have kids, they distribute their coins. Right. I don't think the goal of anybody is to bring their coin to the grave. Right. What's the point of that? Right. Remember that a lot of these people accumulated 10, 12, 13 years ago. A lot changes in 10, 12, 13 years. People's life change and they have different priorities. So the fact that people are dispersing coins, I don't think should be surprising. I think the decentralization piece, we touched on this in the last discussion, as the sort of core big holders evolve, the core developer community is going to evolve. There are different players in Bitcoin now. And that's going to necessarily change the nature of it won't even be a community after a while. It'll simply be another asset. I think that's the inevitable evolution. It's going to not be just, Bitcoiners doing things. It'll be everybody. But certainly there'll be institutions, there'll be different people, different actors who play different roles. And I think there'll be some growing pains. I think maybe some of the discussions on Bitcoin Twitter now are probably reflective of that. But there's going to be an evolution because there are different voices that want different things. a lot of these voices are, class of 22, class of 23, class of 24, who just look at this asset differently than class of 15. That's inevitable. This is still a very, very young asset. And I think the community is going to evolve to the point where it's no longer a community. It is simply an asset class that has different actors doing different things in it. But it's going to be different, and I think we're seeing some of the growing pains in that. But I do think there are, on some level, certain risks to decentralization, because there's different assets. Different actors are going to have different priorities, and then some of these actors are going to be very powerful, and these actors are going to want to impose their view on the protocol. This is why I think some of the discussions we're having now are very, very important. Because it's coming, and I don't think that sort of the traditional authoritative voices in the community are quite ready for it. But I think the realization is growing.
Ken, I'm curious if you find this this shift that you just described, where the community is sort of dissolving under the pressure per se of like the institutional adoption. Is that concerning to you?
Yeah, it is. I mean, I think the Bitcoin's initial appeal is its fundamental nature. And that's why I think people are attracted to it, and that's what's made it valuable, was its nature. But again, it's organic, right? It is on some level a reflection of the people that use it, that build it, that push code. I mean, it is an organic, on some level. It's an organic entity, and so it can evolve and it can change. Which is why, again, I've gone on about this every week, and I'll talk about it again, and not being prescriptive, but there needs to be some consensus among sort of the traditional authoritative voices about what this protocol is going to look like and how it's going to build and grow, because it is going to build and grow, whether people want it to or not. It's going to change. It would be very helpful if there was a general consensus about direction among the traditional authoritative voices before other. I just don't think that TradFi, like when the guys at JP Morgan that decided that this is a good idea to use Bitcoin as collateral, aren't really thinking about consensus. But at some point, some of them are going to read about, oh, damn, there's all kinds of discussions going on about changing code about this thing that we have billions of dollars locked in. I want a voice. I'm curious. I'm going to become part of that, or I'm going to hire a dude who's going to tell me what to do. That time is going to come. So it doesn't require being prescriptive, but I think there are some of the traditional voices are slow to acknowledge that change is coming, and they can't stop it. So getting while the Bitcoiner community still exists, getting our house in order, I think would be quite helpful.
Well, I think part of it's getting our house in order, but I also think part of it is building a bridge, right? When there is this sort of baton pass from the traditional Bitcoin cypherpunk sort of edgy community to sort of the new class of institutional holders, you need some of the old knowledge to be transmitted to the new, and you need people that are willing to sort of sit astride both sides of that fence. And I think that is a big part of what we are doing, specifically with regard to the government, which is one of the new increasingly important stakeholders. And to tie this back to our sort of earlier conversation about Samourai wallet, a lot of what we're fighting for is to have the government not intervene at the code level in ways that they conceivably could. I also think we, or some organization like us, needs to play a similar role with Wall Street. The government incentive is to control the code in a way to make it less censorship resistant. Wall Street's incentive is going to be probably to, as much as possible, ossify the code because they care more about Bitcoin the asset than Bitcoin the network. And Ken, I know you're very famous around the office for having very spicy takes about BIP 444. So you might not be the person for that, but I do think we need people that understand Bitcoin and its ethos to be able to speak to the big banks and asset managers and help us bridge that divide.
I was going to say that's why Zach Shapiro is head of policy at BPI. But now what do I say? But still, that's why Zach Shapiro is head of policy at BPI. That's well said.
All right.
Back to you, Cohen.
Yeah, nice try. I'm not biting.
Yeah, this is good.
Edit that out, Spencer.
Yeah, we've got enough pleb slop this episode.
All right.
And we don't need any more of your pleb slop. which is what I call it. That's what my wife makes me for dinner every night.
Oh my
Just
god.
a big double helping.
So I guess like to wrap up a little
Back
bit
to
here.
it. Back to it, boys. Back to it.
Back to it. I think that like the thing that potentially worries me, Ken, like part of where my question to you came from was like we hear a lot from our friends at the Human Rights Foundation about how Bitcoin is a tool for freedom, how Bitcoin is, you know, really sort of like integral to a lot of human rights advocates, people in authoritarian countries, for helping them to sort of push back on tyranny, right? And you know, again, I think you're precisely what you're describing, where you know these institutional players will have these other interests, right? That maybe aren't aligned with what we understand the community to be sort of rallied around. I'm curious the extent to which like that threatens, you know, Bitcoin as a tool for freedom, if you think it does at all.
Well, I think this gets back to the fundamentals of why we do policy. And we hear, I mean, my friend and colleague Zach Shapiro hears about on Twitter all the time about, you know, the things that BPI doesn't do right. But the reality is, as we joke, right, you know, you may not like politics, but politics is definitely interested in you. And we can make a choice where we can put Bitcoin to the test as resistance money, and it'll play that role perfectly well. I'd rather not live like that. I've lived in places where people use it as resistance money, and it's not great for those people. Or we can build a foundation in law and regulation that allows us to benefit from the other things that Bitcoin gives to human beings. Whether it's us who don't, you know, the four of us who don't really need Bitcoin as a human rights tool. But we need to build policy and be cognizant as we talk to regulators and government people about what we think the right sort of regulatory framework should be for this asset. We need to keep those people in mind. Because it could very easily be subsumed by other interests that just have different ideas, self-interest ideas for what this protocol should be. So this is fundamentally why we do the policy thing in DC. This is why we go on and on so much about the Blockchain Regulatory Certainty Act, because without these basic foundational protections, it's very easy to run the risk of regulatory capture. And we all hear there are voices in the city that love Bitcoin, but they love it for its potential as a tool of regulatory capture. And I think we need to do everything we can to avoid that. And luckily, I still contend, despite, you know, sort of the nasty politics now, there is a general bipartisan consensus that is the right approach. But, you know, having a generic bipartisan consensus doesn't necessarily outshout sort of the regulatory capture crowd and people that have different ideas for how this protocol can benefit them personally. So this is fundamentally why we do policy, because again, as I described it as organic things evolve, and they evolve in good ways, or if you treat them badly, they evolve in bad ways. So this is why you're going to hear ad nauseum every week why we want our supporters, Bitcoiners, to call representatives and tell them you support the Blockchain Regulatory Certainty Act. It's critically important because, as we discussed at the beginning of this chat, right? We started at the last echoes of the Overton window of 2020-24. It's kind of ugly. Now we're talking about big money, big capital, acknowledging Bitcoin as a global asset, which is great. But that opens up a whole other range of questions about things we need to think about. So this is why getting the basics right is critically important.
Yeah, Ken, I think I totally understand, and you know, the counterpoints, people who are worried and concerned or would even disagree. I think there are 1,000 different ways this could have gone and still could go. And you know, and so I kind of, you know, I understand and I get it. I also understand that the old adage, if you're not at the table, you're on the menu, is absolutely the case. And I think Bitcoiners, if you take 5 seconds, know what it feels like to be on the menu. And in many ways, we still are, as we were discussing earlier today on the pod, the first, you know, at the top, Samurai Wallet developers and others. And so, yeah, I think there's a balance, and I think, it's important that all of this is done right, and that's hard to do. But it's hard to do nothing, and I refuse to do that either. So, we will trudge forward, and we will do, I'll do my best, and I think so far, it's not just BPI, there's a million people out there thinking about this and working on it and putting all they have into it and giving it their very spending a lot of time. And I think there are good. I think they're good. I don't think every elected official is a crook. I don't think everyone who works in government's a crook. I've met many of them, and they're not. There's good people. They're also crooks, and so there's just a lot to navigate. It's messy, but just because it's messy, just because it's difficult, just because it could go wrong, doesn't mean or not. Those aren't excuses to not do it. Those are excuses. Those are reasons to do it well, and to really focus and to put our best foot forward, put everything we have into it, because it's worthwhile. And I think it's going to be worthwhile.
Yeah, from my perspective, there's also a reason that we sort of feature a variety or diversity of content at the annual policy summit, right? This network is a conglomeration of just so many different interests, of so many different parts of the community, and increasingly, right? We seem to agree on this, that the institutions are arriving. The institutions are increasingly going to want to have some say in the way that the community governs itself, the way that the code is published, what's being built, what isn't being built, the way investors are engaging with it, on and on and on. And I think the strength of the Bitcoin Policy Summit is that it brings all these people into the same room, and it fosters that dialogue. And Ken, the reason I asked you about freedom money is because every year, we have our friends from the Human Rights Foundation. They bring in, 4 to 6 human rights advocates who, their sort of very livelihood relies entirely on Bitcoin, right? We have Anna Chahovich, right? She's from Russia. She worked for the Anti-Corruption Foundation. That was the sort of lead opposition party to Putin. Alexei Navalny was the president of that organization, and she talks about how their banks got shut down, and the only way they could pay their people, the only way that they could continue to protest, was with Bitcoin. And it's just imperative that policymakers hear that, and I think equally it's imperative that folks on Wall Street hear that, and that again, this bridge that you were talking about, Ken, that these very important values of Bitcoin, the way that people are using this in the real world, that gets communicated, and that there's an understanding among the community, especially as the kind of elements or constituents of it change, that ethos is protected. So I just think that's extremely important. I think, again, your mention of the Blockchain Regulatory Certainty Act, that's super important, right? We talked about Samourai wallet, tools like that are being used by human rights activists, right? The second that the United States shuts those things down, that doesn't just shut it down for people here in the US, right? In some cases it might, but generally speaking, these are sort of this is a technology with global implications. It affects so many people, and it's just so important that we get this right. So that's what I wanted to kind of wrap up with here.
Yeah, institutional adoption is normally driven by individual demand. I mean, you're talking about Anna Chakovich and the Navalny Foundation. They were, you mentioned, getting debanked, all these sorts of things. But it was also donors. Their donors were in Russia, and that the donors, if you donated using your bank account, it's probably not a great idea. You could be found, and many of them were probably, were and getting a lot of trouble for supporting the opposition. And so individuals using Bitcoin, needing to use Bitcoin, is what drove that institution to adopt it. And I think they're really glad they did. You've kind of seen what's happened now. Yeah, it's a somber use case. It's sad, but it's also kind of the basis or one of the bases of everything we're doing.
Totally. All right, Stephen, speaking of donations, we've got some some fun news to share with the community about, BPI's kind of end of year, how we're looking ahead to 2026 and how folks can get involved. So yeah, just curious if you can kind of let the folks in on what we're planning for the end of the year.
Yeah, it's going to be, listen, it's we're a 501c3 charity, BPI is, and it's tax season. It's time to sort of wrap up the year, and every year we do a end of year giving, charitable giving push. This year we're going to be focusing on sort of educating everyone on donor advised funds and how those can be leveraged in a year like this. I mean, especially if we get a pump here at the end, if you've had any sort of, massive capital gains, donor advised funds are a great way to handle that. And we accept funds from donor advised funds. So you can go on our website, you can contact us, and we're going to be rolling out an annual report. We're going to be doing a series of posts, social media, newsletters, kind of talking about everything we've done this year. It's been a very, very busy year for BPI, and a really cool year. I mean, there's so many neat stories to tell from Vice President JD Vance talking about us and our work. There's just a lot to celebrate as we head into the end of the year and kind of look back. And I think there's a lot of reasons to support our work. I think we're well positioned to continue growing, continue having an impact. Helping guide America through the rise of Bitcoin, and seeing Bitcoin and America flourish together, I think are both things that are really important to us, and mission, vision alignment that most community agrees with as well. So excited to kind of get into that more, but appreciate you bringing it up, and look out for some of the things we're going to be doing. We're going to have some events, fundraising events and things that are going to be really exciting. So please be a part of it. We'd love to have you on board.
Beautiful. Thanks everyone for listening, and we'll see you next week.